CommitToWealth.com. Creating a legacy by committing to real estate wealth.
Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I'm your host, Juan Vargas. On today's show, we have another awesome guest. His name is Daniel Holmlund. Daniel is the founder of Aalon Capital, LLC, a multifamily syndication company with over 318 units under management in the Houston Metro. In addition, he organizes 2 different real estate investment clubs in the Oregon Metro, including the Willamette Investor Network. He's based out of Portland, Oregon. So Daniel, welcome to the show.
Juan, it's good to be here. Thank you for having me on.
Hey, it's a pleasure. It's a pleasure. So I did briefly talk about your background, which, obviously doesn't, tell us too much, except for, you can go further into detail on that. I know that you also are a podcast host. So please tell us a little bit about that. And tell us about your background. Tell us, we know that you're based in Portland, Oregon. We know that you're a, multifamily syndicator as well. So we want to know more about you. Who is Daniel Holmlund?
Sure. So as you said, my name is Daniel Holmlund. I'm actually a full-time software developer at Intel. And I'm a person who believes that real estate investment and having a job can be done by the same person. So you can increase your investment portfolio while working a full-time job. Some people enjoy their jobs a lot and want to keep them. Some people are trying to transition away from them. I've always loved real estate. Back in 2002, 2003, I was involved in a lot of homes and buying single-family homes and renting them out. I moved overseas in 2006 and spent 4 years in France working for a nonprofit group over there. And during that time, I actually did hard money lending to a group of rehabbers going all the way up into 2008. And as you can imagine, everyone's got their 2008 war story. And so mine is basically that my rehabber called me up one day and said, "Hey, guess what? You're not getting your money back."
Oh, man.
It was not a fun conversation, but we eventually agreed on the terms on which he'd sign over the house to me. And so I rented out that house long distance, learned a lot about remote management of assets and property management doing that. I waited till about 2015, where the value of the property came back up, sold it off, took a little bit of time off of real estate, but I enjoy it so much, it eventually came back. I started getting interested in syndication in 2016. And around that time, the market had picked up significantly. Syndications were starting to become better and more well-known. And I made a conscious decision. I could either go the route of getting a person to mentor me, or I could go the route of learning it myself, but finding excellent people to surround myself with that'll teach me this industry. And so I went the latter route. I found a group down in Houston who had a good track record. They were multifamily value-add syndicators. They were buying apartment complexes that were either mismanaged or had tenant problems and fixing them up, bringing the revenues up that they took in, increasing their NOI, and adding value to that property. And then, of course, giving a return to the investors. So I invested with them initially in a limited partnership. And that was a 56 unit down in Houston, Texas.
Okay.
And during that time, I asked all sorts of questions. I said, "Hey, can you send me all your legal documents? Send me the private placement memorandum, the subscription memorandum, the operating agreements." I said, "Can you send me the underwriting, your insurance paperwork?" And I asked the group a lot of questions and tried to figure out everything I could about their business. And I also made myself of value to them. So I did tasks for them. For instance, they were looking for more property managers or people that had overseen larger assets within the Houston area, because they were a growing company. They've got about 100 million under management now, so they've grown quite a lot since then. But they were looking for finding top quality property managers, and I came to them and said, "Hey, I can help you do that." So I took the top 15 property management companies in Houston, put them on a spreadsheet, ranked them, and then found the top 10 people in each of those categories and came up with a way of basically headhunting them. So if we want to attract top quality talent in property management, we need to find top quality people and have a strategy for acquiring them. And
Correct.
They liked the effort that I put into helping their business. And when their next deal came along, they invited me to be part of their general partnership. So I was part of their general partnership on a 122 unit in Houston, Texas, and then following that, actually a 196 unit in Houston, Texas. And for both of those, I worked with the team on doing due diligence and also raising funds from investors, and in quite a number of areas that a syndication team needs to perform in. And that's how I got my track record, going from being an engineer to also having a company that specializes in multifamily acquisitions.
So I like that you started with as an LP, right? So for those of you out there listening, LP, limited partner, you invest into a deal. You're basically bringing in capital to a deal, and you're getting a return. And obviously there's tax benefits. You got to make sure you consult with your CPA on that. So you started as an LP. But you also found an opportunity to come in as a GP. And had you do that, you're able to add value to the guys, right? And I think that there's so many different ways that you can add value, but you added a value in a specific way, which was on the property management side, finding somebody that's solid, some of the top talent there, and maybe they weren't aware of that, or they weren't aware of how to put that together. You're able to do that for them, right? And then find the top talent. They appreciated that. They were able to bring you in on the GP side, which is the general partnership side. So you have the limited partnership side, you have the general partnership side. Typically, the general partnership side is a team that puts it together. You can structure that part so many different ways as well. But it's typically the team that is in charge of the asset management, the overall operations, making sure that the asset and the business plan is executed properly. And so you're, so to speak, I would say you're the pilots or the co-pilots, right? And the limited partners are the passengers in the plane. Everybody's going in that same direction to that same destination. So that is very awesome. So 2 different deals that you got into in a creative way. So when did you guys close on those deals specifically?
So those were closed on in May of 2019 and August of 2019.
Okay, so not too long ago. So yeah, fairly recently. Okay, so I want to touch real quick on your background, because you said that you have an engineer background, right? And that's another thing that we have a lot of investors, even for us, we have a lot of our investors are engineers, right? Engineers, doctors in the IT space. But we do have an overwhelmingly majority of investors are engineers. So I want to know, what makes it attractive, or the multifamily space, what makes it attractive for engineers specifically? Is it because of the numbers? There's a lot of analysis that's involved, and I know engineers think a little differently than most of the people out there. So in a good way, right? You're always pretty analytical. So you think that's very helpful, and how does it translate into the multifamily space from an engineer to multifamily?
Sure. I would say 2 things about it. First of all, engineers, doctors, lawyers, people that are professionals are extremely busy. And multifamily assets, or in general, commercial assets that are bought through syndications, are one of the truly passive ways that you can invest in real estate. So one of the things that really attracts them is that they're adding capital to a syndication or to a group that is buying an asset. But right. Once they've added the capital, the managers of that particular syndication do all of the work. And so for a busy professional, it's a great way to look and say, hey, I've got a asset that is projected to have certain returns. And those returns I like them better than the stock market, because you actually have a business plan and they are projected over a 3 to 7 year period typically. And for the limited partner, once they've made that capital contribution, all they really need to do is to listen to the updates from the general partnership and collect their checks. And so one thing that really appeals is that it's a passive way to invest in real estate. You're not going to be bugged with tenants. You're not going to be bugged with any problems. You don't have to do the legal work. You don't have to, deal with flood insurance or anything that might go into purchasing a multifamily asset. Your main due diligence happens before the asset is acquired. And that main due diligence is looking at the people that are running the deal, making sure that they have a track record that's rock solid, that they are providing investor returns, and that they fit with your investment philosophy. They communicate well. I've seen some partnerships that execute extremely well, but don't communicate very well. And it's hard to recommend a group like that. So I usually look for people that have several deals that have gone full cycle, that have a good track record in their current dealings, and then are also really good communicators. And that communication might be a monthly update, it might be a quarterly update. Either way is fine. I think quarterly is probably honestly the longest that you should go to update your investors.
Yeah, no, that's a very good point. I mean, yeah, providing the monthly updates is very important. That's what we do as well. You have to make sure that you're giving those updates to your investors for what is going on in the previous month. And if you can do a quarterly, in addition to those monthly, then that's even better. If you can do an annual report, then that's even better as well, right? Add those all together. So I like that. So what specifically did you like about the Houston market? I know that you say you found this local group. What's specifically targeted Houston? Why Houston out of all the markets that's out there? And you're in Oregon, so I would imagine that you're not necessarily finding anything in your own backyard. But why Houston?
Sure. So a lot of things have to come together to make a deal worthwhile. One of them is obviously knowing the management that's there. These are people that I really got to know, and I knew that the Houston market was an extremely strong market. You've got from a demographics perspective, you've got a lot of people moving in. You've got great job diversity. You've got median household income going up. So all the demographics are right for a place that you would consider to be strong for investing in real estate assets. So that's great. Some of the other things that I liked about this group, and maybe I should back up a little bit and talk about what I do at Aalon Capital. Right now, I partner with operators that are in different metro areas. So my firm will go in and find an operator who's working extremely well. We will partner with them, and we'll offer that investment to our investors. So our due diligence is going in there and finding an operator who's executing extremely well, who knows their market extremely well, and who has an on-the-ground team that performs well. One of the things that I liked about this particular group is that they had, in addition to their syndication LLC, they had a brokerage which was operating within the Houston area. So they had on-the-ground brokers. They were getting off-deal markets, deals that hadn't yet been offered to the general market, meaning it's a broker-to-broker relationship. And then they also had their renovation company and their property management company in-house. So they weren't necessarily paying an external group to do that. Now, there are pluses and minuses as to whether you want to keep your property management in-house or external. One of the best reasons for keeping it in-house is that you can keep your expenses lower generally. And so this group had kept their expenses lower by investing in apartments that were all throughout the Houston area. And they were keeping their expenses low. So that was one of the things that I liked about them. The other thing that I really liked about them was that they were actively reaching out and building their network. So they were not necessarily in need of partners, but they were actively going out and leaving 20% of their deal or so for junior partners to come in and partner with them. So from their perspective, they left part of their deal so that they can bring in new people, grow their network. And on the flip side, that gave me the opportunity as a new person then to come in and join with them and ask a lot of questions. And so they were extremely supportive of that. And that's how the business grew. Now we were partnered with several other groups, and we can talk about that later. But our business is growing and booming. But the key point to it is that you need to be very particular about the people that you are partnering with and the types of investments that you're bringing to your investors.
Understood. So what do you do as far as being remote to Houston, right? So yes, you're partnering with this local group, and they may be handling the majority of the work here, especially if they have their own in-house team to manage. But how are you involved in that process, being remote?
Sure. So now that since I am remote, obviously everything that I need to do has to be done through some sort of telecommunications. So over the telephone, I'm in their regular updates. I also call and keep track of the different property management going-ons that are happening. So, for instance, right now I can say that our property that closed in May, 46 units have been renovated at this point, which is 38% of the property. We're getting an average. We're beating our average of renovated units by 2.5%. So we were forecasting that 5% of the units would be renovated over a given period. We're beating that by 2.5%. I was also involved in raising capital or finding equity partners for this group, and also as a loan guarantor. So I was involved in all of those different areas. In terms of raising capital, what that looks like is that I run meetup groups that are generally real estate general groups. For instance, I actually run a meetup group on the Intel campus for real estate investors. And it's a general group. You could talk about any type of real estate investment that you want. This Friday, we have a person who's coming in who's going to talk about Airbnb rental investments. And after that, we have one who's talking about private money and purchasing mortgages. So it's a very open-ended group, and it's just a fun group to go in and talk to like-minded people with. So I'll run those groups, and I'm very open about. I have a firm that does multifamily investment, and some people decide to talk to me about that. So we build up a relationship, we get to know each other, and I can bring that value to people that have excellent deals.
Understood. So what does your typical investor look like? And are the majority of your investors coming through your meetups and your investment clubs? Is that where you're finding the majority of your investors, or is that through your prior network or through your career?
Yeah, investors all have their own stories. Right now, the majority of them are actually finding me online through my podcast. So my podcast is the Win Multifamily Show, or the Willamette Investors Network Multifamily Show. We are a podcast that's been out there for not that long. We're at about 20 episodes right now, but we're starting to get some traction. I have a couple of investors that know me just through Facebook groups or through the Willamette Investors Network, which used to be a physical group that was actually based in Portland. But people find you through different ways, and it's up to you just to be transparent on who you are and what you're doing, and usually the people that think like you will find you.
Got it. So tell us a little bit more about your local market there in Portland. Why aren't you finding anything there? I would imagine, the laws are a lot different, specifically the landlord laws. You can get into that a little bit if you like, but tell us a little bit why that market is different and what specifically is different about that market.
Sure. So there's a couple of things. First of all, I think it's really well known that the two different coasts tend to be cyclical markets, meaning that appreciation in the assets tends to rise and fall at a faster rate than the middle of the country, which tend to be more linear type markets. So when I say a linear market, what I mean is that you have properties which move up in value at a constant rate. They don't tend to have wilder fluctuations. And usually you can find great cash flowing properties in these areas. Portland, Oregon is not one of those areas. And since I'm a cash flow investor, I don't tend to look at Portland very much. There are a couple of great meetups that are here, but most of the people that are here don't invest in the local area. We do talk to brokers that are in the local area just to see what's going on in the market. But I honestly don't spend very much time researching the Portland market. We also have interesting landlord laws which are going into effect. I think it's fairly well known that Portland is test piloting a rent control program. And it's interesting to talk to different people inside meetups about what they think about that. Generally, it means that it's going to be, well, there are a lot of different opinions on it, and it goes into the particulars of what the law is. Right now, the rent control says that you can't raise your rent more than 10% in a given year, which is a huge amount of headroom. Most rents aren't normally going to go up that much. But at the same time, landlords and investment specialists are looking at that because it is a foot in the door in terms of regulating how much you can improve a property and thus increase your income from that property. So some people are shying away from it just because of that. But in general, I don't invest in this area just because I think there are better deals to be found in the Texas market, in the Midwest, and down especially in the Sun Belt.
Understood. Okay. Well, Daniel, it is time for our Nuggets of Wealth. These are questions that I ask every guest every week, and hopefully they are able to help out the audience. Question number one, what is a good tool, source, or platform that you use almost daily that can also help others?
So I use propertyradar.com and bestplaces.net quite a bit. So bestplaces.net is an excellent place. There's also city-data.com, which is another great place to go. Those two are give you information about demographics. So you can type in a zip code and you can say, hey, I'm talking to somebody who's in Memphis, for instance. What is it like in Memphis? What is the economy like? What are the people like? What's the crime rate like? It gives you an enormous amount of information about that particular area, and it's free. So I highly recommend
So propertyradar.com and bestplace.net, and the other one that you said is city-data.com. That's one that I use on a pretty common basis as well. Okay.
Yeah, I would say bestplaces.net and citydata.com are fairly similar in the service they provide. Property Radar is a hyper-local platform that is not free. It's a paid service, but basically they will break down demographics on a neighborhood-by-neighborhood basis.
Got it.
So if you're researching a city and you want to know which is the best side of town to invest in, it's really easy to go there and get that sort of data.
Great. What was the best business advice you ever received?
The best business advice that I've ever received is build your network. And real estate investment is a team sport. It's something that I say over and over on my podcast. Real estate investment is really all about who you know and finding excellent people to surround yourself with. So if you are just starting out and you don't know where to begin, I would say the best place to begin is to find people who are taking on, talking to people that are coming into the market and who have experience. And so the best advice that I have heard is build your team.
Build your team. Build your network, and real estate investing is a team sport, and those are 100% accurate. What book are you currently reading, and which one has had the biggest impact on your life? And you can speak on it as a personal book or your personal life or business as well.
Sure. So the book that I am currently reading right now is the Diligence Handbook for Commercial Real Estate, and it's actually great. It's a lot smaller than I thought it was originally, but it's a book that basically gives lists on how you do your due diligence in acquiring a property. What are the different things that you should check off? Have you gone through your rent roll? Have you gone through the different agreements that are there? And it's a very exhaustive and thorough book. It's perhaps not the most exciting reading, but it's a really good one. In my business, I usually tend to partner with people that do a lot of the due diligence, but it's good to be able to be up to speed for your investors and for your conversations with your operators.
So who is the author on that book?
I will get it. I will get that to you. I have to look it up.
Okay. So is that the only book that you have right now that you're reading?
Yep. That's currently what I'm reading.
So what is the best strategy to manage your time?
That's a great question. Time management is a constant challenge for people that are in this space because you're juggling so many different hats and talking to so many different people. Honestly, the best time management software that I've found is simply Todoist at Todoist.com, and I use that in coordination with Google Calendars and Calendly.com. Calendly.com is a service that lets you book meetings with people over email. And it's very effective at finding times that you have in common and booking them. Google Calendars, everybody knows Google Calendars. It's a great tool. And there are a lot of other tools that are like Google Calendars, but just a simple calendar and a simple to-do list.
Correct. So tell us a little bit more about your morning routine. If you could tell us in 30 seconds. Sure.
I wake up at around 6:30. I tend to go down, have breakfast. I do a little bit of stretching in the morning. Usually, I get it done about half the mornings, to be honest. And for me, I have 3 wonderful kids who wake up around 7 o'clock. And so the morning from 7 to 8 is about getting them out the door to school.
There you go. Very similar to me. 3 kids, and they have to go to school as well. At the end of your life, how do you want to be remembered?
So right now, Aalon Capital gives 25% of its money to groups that help adults with special needs. My brother is a special needs person. He had brain cancer when he was 8, was given 6 months to live, and he's now, he's 39 years old. And it was a miracle that he survived, but he's got a lot of learning difficulties. And so my heart really goes out to people that have lived through either horrific health problems and need help now as an adult, or people that have just always needed help. So I tend to work downtown in Portland, and also with my brother a lot. And I'd like to be known for doing that and for being a good father.
Love it. Thank you for sharing that. Where can Commit to Wealth Nation go to contact you and find out more about you and your business, Aalon Capital?
Sure. So my business is AalonCapital.com. It's AALON Capital.com. You can contact me at Daniel.Holmlund. That's HOLMLUND at AalonCapital.com. And I always look forward to hearing from people and encourage you to write.
Sounds like a plan. Okay. Well, Daniel, I really do appreciate it. Thank you so much for being on the Commit to Wealth podcast. Thank you so much for adding some value to my audience and sharing your story as well. So I wish you continued success.
Thank you, Juan.
CommitToWealth.com, creating a legacy by committing to real estate wealth.